The assets that are usually favorable and profitable during the prevailing inflation scenario have not been profitable so far this year. The following markets and assets, securities, have not been a good investment this year due to the rising inflation. Emerging markets, large company shares in general, commodities, precious metals such as gold, buying shares on the stock exchanges in the BRIC countries, Brazil, Russia, India, and to some extent South Africa, is also usually a strategy to follow in one's securities portfolio for wise diversification. But nowadays, the stock market in Russia, as one of the BRIC countries, is not a good choice for buying shares. This year, during prevailing inflation, all markets, such as emerging markets and soft commodity market, have trended downwards, which should not happen, but is a fact. Let me show how various assets, securities, and indices look this year that have not responded at all to the upside amid prevailing inflation and fears of a coming recession. I begin by showing how the major US stock indexes have collapsed this year during inflation. Here we can see on the screen, this is the weekly chart time frame, and it's Standard and Poor's 500, the 500 largest companies in the US. And we can see that we have a downtrend for many weeks. During, we can see that it's trended down for 6 months. And for the last 4 months, the market have been traded sideways, up and down like this. And going back to weekly time frame, this is today, minus 1.42% for the Standard and Poor 500. And first of all, I anticipating that the market price will hit the former low at this level, 36.41. But on a short-term scenario, I think we will have some kind of rise on the upside. Then the downtrend will continue down to this level. This is the former high before the COVID pandemic bursted. And I think this price for Standard Poor's 500 will reach this level at here before the market crashed on COVID pandemic at level, let me see, like 34.00 approximately here at 34.00. Another strong demand level is around 3,000, which is also a round number. We can see here that we had a strong resistance in the future, and we have a support here. So this level at 3,000, little bit below 3,000, is extremely strong long-term investing on the upside. But I think also this level here, 34.00, will also be a good buying opportunity. Let's see how we can look at for the technical. Sorry for the delay here. We can see of US tech, the 100 largest tech companies. It looks like the Standard and Poor 500 index is the same here. It's seeking a double bottom at the former low at 11,019 or 11,020. And same way here as the Standard Poor 500. This US Tech 100 will most likely have a bounce on the upside a little bit, perhaps up to the 13,000 level. And then it's most likely will hit this level here at this high, former high before the COVID pandemic crash here. So the price will reach this level, reach some at this level like 1310, then trending below this level and hit this level. This is a very strong demand zone or level at 96.58 or 96.77, around here. This is a very strong buying opportunity. Um, so you can see that large indices in the US markets this year have trended downwards. So has not been a good investment during this inflation scenario this year. And also the US Russell 2000, same story here, show the same pattern. It wants to seek this double bottom, also have a bounce on the upside, and then we should anticipate that the US Russell 2000 will reach levels here at 1582, or most likely at this level. Let me point it out here. We have a strong demand level at 1448 here. We have a strong resistance, we have support, we have support, we have support here. So this is a strong demand zone at 1446. Let me also to show the stock markets in the BRIC countries, which have also not risen in value during inflation. Soft commodities such as oil and natural gas and the metal copper have also not shown good patterns on the upside. Gold and silver, which are usually a good deal during inflation scenario, have also trended to the downside. So let's have a look on the BRIC countries. Let's start with Brazil, the first letter in BRIC. And we can see this is the weekly time frame, so we can see a downtrend here. We have we have lower highs here, lower highs, and we have also lower lows. You can see. So we have a downtrend here as well in Brazil. It has also been a bad investment, apparently, during this inflation scenario. We shall not look at the Russia stock market. It's not a good investment, as we all know, during this war and the SWIFT that the US has blocked a lot of capital flow in and out from Russia. So we can forget Russia. India, I don't have that graph actually here, but it has also not been a good investment if I can remember it right. And let's have a look on another BRIC country that usually are a good investment during inflation scenario, which is China. And you can see once again, this is the weekly chart, and we can see a huge downtrend here. Let's see on the monthly chart. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. China market have went down for 14 months here, and for 1, 2, 3, 4, 5, 6 months, a half year, we have a sideways market. Looks like the same as for the big index Standard and Poor 500 in US. The same pattern there. We have a sideways market for 6 months. Let's have a look more in China shares, H shares. You can see this also the monthly time frame. So over 12 months on the downside. Let's have a look on the weekly chart. I will actually buy now at this very moment after this video, because I think emerging markets like China could have a very strong upside potential during this inflation scenario, despite that we had a massive downtrend during this inflation. But I think this is a very strong investment opportunity to buy here now at this level. And let's have a look on Hong Kong market. The same scenario here. It has broken below this structure. This is also the weekly time frame. Let's have a look on the daily time frame. I will actually put on a buy order. So I bought it now. This is a good. I will strongly recommend to invest in China stocks, Shenzhen on Shanghai index, which is actually this one. China A50 is a hybrid between two indexes, the biggest stock indexes, Shanghai and Shenzhen. So I will also go long here and buy heavily here. Let's have a look on the commodities, soft commodities. Let's have a look on crude oil. You can see we have a massive downtrend here. This is the daily chart. We doesn't see any good investment opportunities here for a long time during this inflation scenario. Natural gas has been a better, not such a good investment because it's kind of choppy. It's very volatile. So this is a very good choice for day traders, professionals who can buy and sell for a couple of days here. But we could see we had a strong up move trend for, let's say, on the weekly time frame. Yeah. Here we had for 1, 2, 3, 4, 5, 6, 8 weeks, 2 month uptrend. Now we have a downtrend for, this is 1 week, 2, 3, 4, 5 weeks downtrend here when it comes to natural gas. And let's look at metals, precious metals such as gold. You can see this is weak. We have, okay, let's look at month. We have 1, 2, 3, 4, 5, 6, 7 months downtrend for gold. And we have a strong price below this important demand level at 1680. So if you have a close here, let's have a look on the daily chart. So we can see we are below this very important level, $16.78. So we can anticipate the gold to reach a level here, $15.55. I think the gold will reach this level, or even touch this. This is a very strong demand zone level at $1450, $1,450. This is a very good opportunity to go long on gold. Or already at this level, if you can see and a strong demand here on $15.55 is also a good buying opportunity. Among the few investments that have risen strongly in value this year amid rising inflation has been the US dollar. We can see how the dollar index DXY has risen at the expense of other currencies such as the euro, the British pound, the Canadian dollar, the Japanese yen, and the Swedish krona. Dollar strength holds. So let me switch on to the DXY dollar basket. It's extremely strong. We can see this is the weekly chart. Each of these candlestick bars represents 1 week. So we have over 1 year, 1.5 year here, about 70, 80 weeks of strong push on the upside. The US dollar is extremely strong for 1.5 years now. This is the daily chart. We can see that the trend is respecting this orange or yellow exponentially moving average, which is 100 EMA. Went up here, went up here. So the first buying opportunity to follow this strong uptrend is to wait for this dollar to plummet to this level, the blue exponential moving average, 50 EMA. This is 100 EMA, this is 50, and this is 20 EMA. So we can see that most of the time the dollar went up, the demand kicked in at this 50 exponential moving average, 50 EMA here, boom, up. Here also respected the 50. Sorry. This is the 20 this time, very close to 50. Here it went below this 50, very near the 100. So I would suggest to make a buy order at this level. Here, below this 20 at 10,743. So if you see any demand bullish pin bars at this level here at 10,753, we could have a buying opportunity here, or wait for this 100 EMA level here, which also is aligned with demand here, the former resistance level here that comes to support here in the future. That's aligned with this 100 exponential moving averages. So a buying order here, 10,646, should be a better choice than to buy here. Because after such a long uptrend in the US dollar, the pullback usually comes strong. So I think it's more wise to wait for a pullback down to this level here, about this line, 10,560, or this round number, 10,600. Okay, this video showed you how emerging markets and the BRIC countries and American stock indexes in general have not been a good investment this year during prevailing inflation. One of the only assets that has gone strong is the American dollar on the currency market. Thank you. Happy trading.